Let's get talking to another management that came out with numbers. Krishna Bodanapu, the President and CEO of Infotech Enterprises, joins in to talk about the numbers, the Q1 FY14 performance. Krishna, hi. Thanks very much for joining in. One of the key points which have been brought up by brokerages this quarter post your numbers is that you might not be able to stick by the earlier guidance of, or maybe the earlier estimates which brokerages have put out on the dollar revenue for FY14, and they are assuming around a 5% growth as opposed to an 8.6% growth earlier. Do you think that the next 3 quarters would be robust enough to surpass this 5% growth? What would your dollar revenue guidance be for FY14?
So good morning and thank you for having me on the show. Yes, the brokerages have their own view of how we will perform for the rest of the year, but we still believe that based on the pipeline and backlog that we have at this point, the year continues to look like what we had commented earlier in the year, or earlier at the end of the Q4 results about 3 months ago. We still believe, based on what we're seeing with our backlog and pipeline, we will have a slightly better year this year than what we had last year, and that's what we're working towards.
Can you give us some more color on the engineering segment, which is which brings such a large part of your revenues? We understand that the revenue growth has been practically not there. It's, if anything, down about 0.5%. Are you expecting that to reverse? Correct. What is the order pipeline over there, and what is the year-end, say, guidance?
So the engineering business, which is about 65% of our overall revenue, is obviously a key driver to how the year pans out. The key challenge that we have had in that particular business and in a particular segment within that business was the semiconductor, or the high-tech market that we address. And there we've had some client ramp downs that have led to the lower revenue in that particular segment that affected the overall engineering business. What we've seen is in the high-tech business, which again which is about 20% of the overall engineering business, we've seen that the ramp downs are all over. The whole effect of all the ramp downs was, or we've seen the last of those effects in Q1 of FY14, and what we see from here is really growth in that particular segment, which will be very helpful, or which will determine the overall growth in the engineering business. Similarly, also the aerospace business was flat this quarter, was essentially flat this quarter, and we also see some growth coming back into the aerospace segment, which is important because of engineering, aerospace is about 55% of the overall revenue. So what we're seeing is, between both of these segments, we are seeing that they will drive the growth of the overall engineering segment. There is still 1 or 2 areas within engineering, especially around off-highway equipment and mining, where we are seeing softness. We don't believe that there's any degrowth over there, but that won't be any major growth, or that won't drive the overall growth. But having said that, considering the 2 pretty critical segments of aerospace, high-tech, and the third one, which is rail, which also is driving a lot of the growth, are looking stable, we believe the engineering business will grow in the next 3 quarters, and will grow fairly significantly in the next 3 quarters. Again, if you look at the engineering business last year, in dollar terms, the growth was about 3% or so in dollar terms.
You'll do better than that?
And this year it will do much better based on... We'll do better than that.
Okay, you said much better, so I shouldn't have stopped you. You couldn't put a number to it?
I can't put a number to it, but and it's difficult to quantify the word much, but I'll still say it's much better than last year.
Okay. Krishna, just coming down to the margins, you all managed to sustain your margins at 16.6%, and this was despite wage hikes. Can you just tell us what the guidance for the margins would be going forward?
So we ended last year at, I think 17.6 was we ended last year. And we said that margins will at least be flat at those numbers for this financial year. We still hold that. It will be at least at that number, considering especially that we have got some tailwinds because of the currency depreciation of the rupee. We believe that it will be at least in that range. So compared to last year, we'll at least have a flat year in terms of margins. But at this point, my sense is it will be better than last year because of the currency upswing that we have.
Okay. Is there any thing that you can guide us in terms of order book and pricing? Will the order book look better than it looked last year? And are pricing pressures over and done with, or will they persist? I mean, maybe shaving off a 1% or so that the rupee gives you.
So in terms of the order book, it's better than even last quarter. Our order book compared to last quarter is about 10% higher than what it was this time last quarter, so about 3 months ago. So that gives us obviously a fair sense of confidence of what the numbers will be for the rest of the year. In terms of the pricing, we're not seeing any pricing pressure or a negative pricing pressure, i.e. We're not seeing price decreases or requests for price decreases.
Sure.
Okay, Krishna, sorry, we will have to leave it at that because the Bajaj Auto numbers have come. Thank you very much for joining us. The Bajaj